McKesson, MCK, New York Stock Exchange. Look at that, stage 2, guys. And look at that. McKesson had its stage 2 on the monthly chart and in August 2015, right around when the SPX was having a turbulent time, where, like I mentioned in my last podcast, you could have thought the meltdown was imminent at that moment. There's just a few clues telling you that it's not quite ripe yet, and it did not break down back in 2015. But McKesson did. Wow. So that could have been how the markets would have looked like if 2015 would have not survived, if the dip in 2016 would have not survived. This could have been it. Fibonacci, my friend, how much have you retraced? 38, 50, 60%, guys. 61. Golden ratio, bam. Hitting that golden ratio, bouncing back up. Okay, is this trend still down? Yes, it is. 12-month average declining. Here is my monthly defined. Okay, that one's a little bit far off. I trust most defined support, defined breakdown lines closest to the breakdown line. Here we seem to have sideways move and now it broke down. We're going to probably get some information on the weekly, and now it's pulling back up right close to that support and resistance. Here's the next level of support, defined ever so slightly. That's what happens when you go up straight. I look for a red candle, close. That means that's where the month price action, the market says, you're not closing below that. So that's how support started to be defined. The more you test it, the more its definition, its strength is proven. So maybe these levels here, potential levels could start bouncing down and up and down and up. All right. Okay, so let's look on the weekly, guys. Where is this thing going? Just curious. Just want to put a greedy target. So we have this big pattern right here. Tested once, tested twice. Nice consolidation pattern on the breakout line. Breakdown, then broke down. Just want to see where this goes. Wow. Okay. That target is insane. Okay, I don't like the symmetry of this. This goes way past, 2008 lows. This is almost back to, that's a full retrace, guys. Even more than full retrace, that measure move. So I'm not quite sure we're going to go there. Let's just start by zooming in on weekly, doing stage analysis. Weinstein style. Below declining 30-week moving average, below the 30-week average, below the Ichimoku cloud, red, defined resistance, underperforming the SPX. Ooh, it's red. What about that volume? Heavy red volume on that down day. Heavy red volume here on that down day. Red. Volume, increasing green volume. So now we're approaching the 30-week moving average. We're approaching monthly defined support and resistance. We're starting to outperform the SPX. You're still underperforming the SPX, but you're not declining again. So what you really want to see before you even think of shorting is maybe a bounce off the zero line, start to re-accelerate your unperforming of the SPX, bounce off that monthly defined support and resistance, bounce off that 30-week average, starting to fiddle around this distance percentage away from 30-week average. And I use it, sometimes you see it visually, but when it starts getting close, under 5%, it's a sweet spot. Now we're at 2.56% off the 30-week average. And it gives you really, especially if it coincides with the breakdown line, and that pullback's happening on contracting volume, and the weight of evidence is still in favor of a stage 4 decline, it's really that sweet spot. You don't want to be above, if it closes above the 30-week average, then you would be out, or your sell stop's a little higher, but you should definitely be out. This is a close above the 30-week average. So you're expecting either going out or you're resuming your downtrend. You're protecting that sell stop with that 30-week average going down. You're protecting that sell stop with that monthly defined support and resistance. So you're playing that pullback right here. Pullback here. Oh, so we had a sideways move, stage 3 on the weekly. Check it out. It's magic. So support, breakdown, pulls back close to the breakdown line, goes away, sideways move. Look at that sweet spot. I'll draw another circle right here. So how close we are. We're 3.8% away from the 30-week average. That's close. So if you look at the daily, we touched it. Bounce off, support, turn resistance, 30-week average, and then resume the downtrend. So that's what we're going to play right here. Pretty sweet entry, right? So what could happen after that? Well, look at all this monthly defined. Support, bounce here, or go through, second test, up, go through, all the way down. Mushroom cloud. Yeah, okay, I don't know about that, but you get the picture. So those could be levels where you're going to get that same type of action as long as you stay below the 30-week average. And that's the whole stage analysis thing. It's and Stan knew this. He observed that. You're out if the pullback goes above the 30-week average and closes there. You're out if your sell stops keep moving them and it goes back above a previous high. You're out. 30-week moving average. Trend line, guys. Oh yeah, the trend line. Stan had a trend line where if you hit 4 points, then it became valid. A break. 1, 2, even 1, 2, 3, 4, so 5 right here. So this is a critical point here. If you close above here, you had these wicks. If you close above the trend line, you would have to take half your position out. That means that the trend was starting to slow down. That was some of the things he observed Stan to put in his rules based on this expected behavior. So if ever it closes above, you would have taken half your position. If it closes above the 30-week average, you're completely out. And guys, stage 4, McKesson, monthly going down, weekly going down, but pulling back to monthly defined support. Whoa! Oh, are you dizzy? And that is the big picture, guys. Never buy and hold. 61% retrace and maybe more. All right. See ya.